Nobody has this magic wand or crystal ball to tell you what will do well for 20 years.
So how did the identification of Apple or Amazon or Netflix and the email that you got from Jeff Bezos happen? Like, what did you see that others didn't see?
So Jeff Bezos did send us an email saying thanks for the support. No investor, no fund manager in the world has had a let alone 100% multi-baggers, even 50% multi-baggers in their portfolio.
Your book, Money, Myths and Mantras, right? You talk about timeless tools, if I can put it that way. You have not made it time sensitive. You're literally laying out your way of thinking for the world to kind of leverage and learn off. Tell us some myths also that Indians hold very close to their heart. You're not a big fan of the gold situation. So where do you see the edge for fund managers, or where do you see the edge if AI is going to do half the thinking for us? Did you face a lot of racism or sexism or both when you went to Wall Street and Bond Street? And
the foreign brokers also came, Merrill Lynch, Morgan Stanley, Jardine Fleming, etc. And in the beginning, I thought that they've been doing it 50 years, 100 years, they must know a lot. So I must learn from what they're doing. And I looked at their reports and I said, this is junk. Indra Nooyi wrote the same thing about the Pepsi boardroom, that that there is a difference when a woman speaks and a man speaks. Now information and data by law across the world is available to everyone. So now the skill set has moved to analyzing masses of information. Right. That is where you can say machine learning, artificial intelligence are the important things, because they can handle masses of information and they can handle it without bias and without the randomness that comes with human judgment.
Today we are going to learn about investing from one of the most respected people in the field, and I do not use this phrase lightly. My guest today has been featured in the 50 most powerful women in business, both in Business Today as well as in Fortune India. She is the founder of First Global, which is India's first global investment firm that went global more than 25 years ago. And they handle over $600 to $700 million on a quantum level. She's widely known for some sharp calls that she's taken over the years, including predicting the tech crash of 2000, India's bull run from 2009, the early identification of Amazon and Apple, as well as exiting major equity positions before the COVID meltdown of 2020. With 30 years of helping people build their wealth, we're going to try and capture as much of this wisdom that we can in today's podcast. I'm also going to talk about her journey, which is from Lucknow to Wall Street, if I can call it that. So please stay tuned, because this is going to be a founder podcast like no other. And before we move on to our guest of today, Devina Mehra, may I please request you to quickly hit the subscribe button so that me and my team are motivated and we keep getting you more such good content. Now over to Devina. Hi Devina, how are you?
Fine. Thanks for having me, Sampada.
Thanks for making the time and coming over. So now that I've got you on the hot seat, my opening question is, you've predicted so many things accurately over the years. What's your big prediction for the coming year or the coming years, if I may?
क्या लगता है market? Always the $1 trillion question.
नहीं, market छोड़ दीजिए, generally बताइए हमें, वो भी चलेगा.
So I never give market projections, index projections either in January or at Diwali. Usual time everybody asks you, because this is something that the person I consider my guru, Daniel Kahneman, says objective ignorance. These are things not only that you don't know, but you cannot know. You can only talk probabilities. So if I talk of probabilities, I would say the Indian market will probably see a better 2026 than the 2025.
All right.
And the reason might seem very topsy-turvy to some of your viewers, which is that right now, if you switch on the TV or the digital media, you will see a lot of people who manage money or who advise about money talking about the risks. And if you go back in time, last few years, most of the time you would have seen the same people only talking about, quote unquote, the India growth story. So for the first time, people are talking about what are the possible negatives. And sentiment is a contra-indicator. Now, this is not my opinion. It's data from every research study done around the world, that when people are talking about risks and saying that should I get out of the market, should I stop investing, should I stop my SIP, the next period returns are above normal on the average. Whereas when money making appears very easy, as it was for most of 2024, for instance, is when you should be cautious. So that's why the 24 to 25, that's whole somewhat Diwali to Diwali, you didn't get any returns. Because prior to that, it appeared that returns were very easy to come by. So always, it's when your brain is telling you to get out is the time to remain invested, usually, conversely. So, and that is for India. Globally, first of all, the globe is not just the US. So the US, I see risks are building up. Also because it has outperformed for such a long time. So it's like sometimes, that thing comes to an end, and maybe, we're getting close to that, or at least close to this whole, that only the technology stocks, and that too a handful of technology stocks driving the US market. So that part appears to be, getting to more risky or more dangerous territory.
I think you have mentioned that. In fact, you've kind of warned that the same excitement we see about data and tech stocks is the same what we saw about ESG stocks a couple of years back.
Yes.
And that did not go very well. So you did warn about that, I think.
Yes, I've, and it's a pattern. In that 99 2000 phase, it was the dot-coms. In fact, I've just written an article about that. At that time, it was that the metric that people were looking at was so-called eyeballs, that if your website is getting enough eyeballs, sometime you'll be able to monetize that.
Yeah.
But actually, most of those companies went bust. I mean, there was an odd Amazon or a eBay that survived and thrived, but the bulk of those companies went bankrupt. So always, there is some seductive story being sold. That's because human beings are creatures of the story. Ads are always stories. They're never data.
That's true.
Right.
You mentioned Amazon, so I cannot resist asking you this question. As I mentioned, you were one of the early ones who identified Amazon, Apple, and Netflix, if I'm not wrong. So
also HDFC Bank, that's in India, that's the most memorable one that people still talk about, because now it's almost 30 years.
Yes.
1996 is when we had brought out a report on HDFC Bank.
And it's one of the sturdiest that there is, right? So how did the identification of Apple or Amazon or Netflix and the email that you got from Jeff Bezos happen? Like, what did you see that others didn't see?
Okay, so there are two parts to it. One is that what did I see in Amazon? I don't know what the others were looking at, because Amazon was a pure numbers call.
Okay.
Wall Street had been very positive on Amazon up to a point, and then suddenly everybody turned negative. So one of the people who had been most positive on Amazon was this very well-known analyst called Mary Meeker, and she wrote a report saying, throwing in the towel on Amazon, that even I have given up on Amazon. Okay. And Business Week had a cover story saying, is Amazon going bust? And suddenly Wall Street thought it was going bankrupt. So I don't know what they were looking at, because we only looked at the numbers. And the last quarter of 2000, they made very substantial cash flows, almost $250 million, $240 million, something like that. And for the first time, it was in no danger of going bankrupt. First time in its history, and people were talking about bankruptcy. So it made no sense to us. And we had a strong buy on it at $15, which after today's all the split adjustment would be about 75 cents. So, made up. But, so as I said, nobody else had a buy. So Jeff Bezos did send us an email saying thanks for the support, because we had not just a buy, we had a strong buy. But, whether you talk of HDFC Bank or Amazon or Apple or whatever, sometimes people come to me and say that which is the stock I can buy and forget for the next 20 years. Now, the thing is that nobody has this magic wand or crystal ball to tell you what will do well for 20 years. Jeff Bezos also did not know that this would be Amazon's trajectory. Aditya Puri did not know this would be HDFC Bank's trajectory. When you are recommending a stock, at the most you think it will double or triple. Beyond that, no one has a 20-year crystal ball. So let nobody fool you that they have that, because no investor, no fund manager in the world has had a let alone 100% multi-baggers, even 50% multi-baggers in their portfolio. So there are some multi-baggers, but you don't know in advance which ones they will be. So if you look at, for example, Rakesh Jhunjhunwala is a well-known investor in India. Now, he made all his money in Titan, Crisil, Lupin, and one or two others. But he would have bought literally hundreds of stocks over the years. He would not know in advance that these were the stocks that would make him money. And if you look at the trajectory of those businesses also, there were so many ups and downs. So I'm a big reader. So if your viewers actually read books about how, whether it is Amazon, whether it is Titan, whether it is Nike, you will see there were so many ups and downs in the history. There was no way anybody could have predicted that will be the 20 or 25 or 30-year trajectory of any company's business, let alone the stock price.
That's one of the things I noticed in your other interviews as well. You always make sure that people don't look at you as superhuman, that you're making calls that others can't. You always make it clear that you're very data driven, right? And that's one thing. And apart from that, there's some, your book, Money, Myths and Mantras, right? You talk about timeless tools, if I can put it that way. You have not made it time sensitive. You're literally laying out your way of thinking for the world to kind of leverage and learn off. So can you tell us a few things which someone can use irrespective?
Okay, so one major thing is asset allocation. Now, this sounds fancy. All it means is that whatever you hold in your life in a portfolio or investment, first of all, take stock of where you are invested. So everything you have, whether it is a bank fixed deposit or a public provident fund or any equity or through mutual funds, look at how much is total in equity, how much total in fixed income, how much in real estate, how much in gold, whether directly or through a fund, or how much in anything else like crypto or something. And then look at that and then decide that is this where I want to be or should I be doing something different. Now, equity should be a major chunk of your allocation, but it should never be 100%.
Okay.
So one of the worst type of advice you will get is that be 100% in equity when you are young and be 0% in equity when you are retiring. So both are not good advice. In general, don't be at either end of the risk spectrum. So don't be only in fixed deposit and PPF, and don't think you can become a derivative or crypto trader or a day trader either. So be sensible with your money, and that's actually 85-90% of the battle won. Don't try to optimize. Don't think also that, oh, once I understand everything, only then will I start investing. You get these broad buckets right and you are through. And again, one major thing which is usually missing in most Indians' portfolio is global investing. So India is not the world. In the Indian stock market is less than 5%. In fact, I think right now less than 4% of the world market cap. There's no reason why 100 or 90% of your investment should be there. So this is another basic rule. So get the basics right. Do your risk management. So if you are investing in stocks, make sure you have a stop loss. You're not just holding on in hope. So those are the things I say. Go to the last page of your DP statement. All the stocks you don't want to think about. They are like your exes that once you like them, but now you don't want to think about it. So get a little objective and get rid of anything that you will not buy at today's price. You should not be holding. This is a very simple rule that look at everything in your DP statement. Whatever you shouldn't be holding, just get out of it. And if you are young, start investing. I mean, even if you are not young, start investing wherever you are today. So if you start investing at 25 for, let us say, a retirement goal at 55 or 60, instead of 25, if you start saving at 30 or investing at 30, every month you will need to invest double the amount. So start as soon as you can, even if you think your salary is not high. Start with 5 to 10% of your salary, but promise yourself that the next increment of bonus I get, 70% I will put into investments. Otherwise, the next iPhone or this or that, something will gobble up your money. I mean, that's the part you have to guard against, because 70% of iPhones in India are bought on credit.
Oh, well, there's a news report which I read recently which said the number one reason Gen Z takes loans is to go on a holiday. So I think there are a lot of people who should be listening to you and hopefully taking notes.
Right.
So your book is called Money, Myths and Mantras. We spoke about some of the mantras that you can follow. Tell us some myths also that Indians hold very close to their heart. You're not a big fan of the gold, the whole gold situation. So tell us some myths that they hold close that they should just throw out of the window. Right away.
I always say have gold and silver in your asset allocation, but it should not be like 30% of your assets. We always have in our multi-asset India and global funds, we always have precious metals, but they are in single-digit allocations. meaning never more than 10%, more like 6, 7 most of the time. But the thing is that gold, people think of it as a safe haven. Now, if you look at the dollar price of gold, it has been extremely volatile. Recently, there was something saying that gold has not seen this kind of rally since 1979. I said, go forward and see that what happened. So 1980, gold made a high. That high was not crossed for 27 long years. Till 2007, that 1980 high was not crossed. 19 years later, in 1999, it was still down 60% from that high. And this was not an aberration. After 2007, the next high it came down 40%. So that's the nature of the beast. That's in rupee terms, it looks like a good a decent chart because it is a rupee depreciation chart, which is why I said that one thing which is missing often in Indian portfolios is global diversification.
Right.
So that you must, and US is not the globe. So our grandmothers were not wrong in buying gold. They were doing this SIP in gold, especially at Dhanteras time, which was good because at that time you could not invest overseas. So gold was the only way to get a currency hedge. To guard against the depreciating rupee, the only thing you could do was buy gold. But now that is not the case. Now you have other avenues also. The liberalized remittance scheme of the RBI is very generous. So it's like $250,000 per person per year, which means family of 4 can send out $1 million, 9 crore rupees. So practically it is enough for anything you want to send out, unless you are a large family office. This is enough of a limit for everyone.
I also want to talk about something else which you've mentioned quite a lot in your book. You talk about AI and quantitative techniques. Now with AI, it's literally made investment advice accessible for everyone. Everyone's using it. With what level of skill, I don't know, but everyone's using it, right? So where do you see the edge for fund managers, or where do you see the edge if AI is going to do half the thinking for us?
So AI, the two things. One is using AI to plan your portfolio. So the kind of asset allocation I spoke about, their AI should be, I haven't tried it myself, but that's a fairly simple thing. So AI should be able to do it, that this is my age, these are my goals, that I will need X amount of money after 10 years, Y after 18 years, and so that, or at retirement, this is my monthly incomes or monthly expenditure rather. So how much saving should I have? So those are simple calculations, and I'm sure any of the AI agents will be able to do that. And some of it had already been happening even before this last gen of Gen AI agents. So you had these robo advisors in the US and all that. So that was one part, but also fund management is little different. Now, fund management, let me tell you our story. So I was a conventional analyst and all that in the 90s. In fact, in 90s anyway, research itself was a new animal in India. No company had an investor relations person, and you were just starting from scratch. And I actually loved that heat and dust of going around, seeing plants. Meeting managements and all that. But now the game has changed. And to a young audience, I always ask this question, that why do you think hockey is India's national game? When we haven't done anything in hockey for 50 years. And the answer to that is that there was a time when we dominated hockey. From 1928 to the mid-70s, India and later India and Pakistan dominated hockey. So much so there were 2 Olympics when not a single goal was scored against the Indian hockey team till the finals, 0.
Okay.
And so how did in 1970s what happened? How did we go from being that dominant to not even getting a bronze medal? It was really because the playing field changed. It changed from natural grass to astroturf or artificial grass, which was a smooth, even surface. Natural grass has a lot of not contouring and so on and so forth. And suddenly the skill set required change. So from being all that very good dribbling and stick work, which people like Major Dhyan Chand were famous for, now on a smoother, more predictable surface, you needed to be very fast, you needed to be very fit, which Indians were not good at. So now something fundamental anyway had changed in investing, which was that in the 90s it was an information age. now information and data by law across the world is available to everyone. So now the skill set has moved to analyzing masses of information.
Right,
And
right.
that is where you can say machine learning, artificial intelligence are the important things, because they can handle masses of information and they can handle it without bias and without the randomness that comes with human judgment. So what we use is and this is from the time we started managing money, we've been using what we call a human plus machine system.
Okay.
So the machine analyzes the data, gives us the output, but it is not it's not a black box, so we know exactly what factors are going up and down, and neither do we just take the output of the machine as is. So there is human skill involved in what you put into the machine and also how you analyze the output of the machine. So people ask me, do quant methods work, or does AI work, or in investing? I said, if I ask you that are financial models made in Excel good or bad, you would say that's an absurd question. Excel is just a tool, it depends on what you're putting in it. And it's pretty much the same for investment management also using AI, that it depends on what you're putting in those quant methods, what's the expertise that is getting coded. But of course, it will shorten a lot of time taken for a lot of data analysis, that it can summarize large reports, it can it can make financial models making quite quicker. So probably, the junior analyst doing it might be feeling a little scared.
Yeah, I guess, you mentioned that when you started your career, research itself was a new animal. And now we're talking of quant, of course. We're now talking of AI and wondering, okay, what is the edge humans have to offer? So in such a long career where you've seen so many different kinds of changes, what do you think, how do you think your adaptability has kind of helped in coping with the changing markets? Because you're in such a changeable industry. So
first of all, even that this industry did not exist when I graduated from MBA. We did not have a course on securities analysis because that career didn't exist in India at that time. So I've been doing something which, technically I was not educated for in a very narrow sense. And which is what, when I'm addressing young people, that's what I say, that, I can guarantee you that what you will be doing 15, 20 years hence, you cannot even predict today. So your superpower has to be learning, adapting, changing, being curious. So for me, it is always a plus, because for me, the big thrill in life is learning. So in my business, the input and output is money, but for me, always the big thrill is in the learning. So for me, it's always a positive that I am in a business where 30 years on, I have to learn every day, and there's never going to be a day where I can say that I know it all, that I know what the market will do tomorrow, what the stock will do tomorrow. So there's always something to be learned. For me, it's a big positive. So, I think for everyone, curiosity is a superpower, the ability to learn and change is a superpower. So that is something, I think now it's becoming, the time frame is becoming shorter and shorter.
Yeah, it is.
So therefore it becomes all the more important.
It is. We spoke about First Global across many other markets, and you have founded literally the first global Indian investment firm. So which was the most difficult market for you outside India? I believe people were not too encouraging. They said, oh, what's the point? Don't bother, this, that. So which was the most difficult market for you, and what has the journey been like?
So first of all, let me tell you why I went global. And this was the late 90s. And one was this, for most viewers, it will be in the history book, something called the Asian crisis, where all these high growth economies of Southeast Asia went through a crisis where their currencies crashed and the markets crashed. So in dollar terms, all those markets in one single year went down 50 to 90%. So Taiwan went down 50%, Indonesia went down 90%, and all these South Korea, Philippines, Thailand were between this 50 and 90. And that was a wake-up call for me, that this is the danger of being in a single market. And during my Citibank time, I had spent a few months in Indonesia setting up Citicorp's securities subsidiary. And I said, so I could actually visualize it. I said, if I'd been an Indonesian today, I would have lost 90% of my net worth.
Yeah.
So that was one part. The other part, as I said, I am a learning junkie. So I said, kab tak, keep doing the same stocks, same Infosys and HPCL and SBI and so on and so forth, and Bajaj Auto. And so if you look at the list, it hasn't actually changed that much in 25 years. And I'm a first principles thinker, so I said, let me think of now going global. And at that time, I was not managing money. So the first 2 decades of my entrepreneurship journey, I was on the other side. So I was what is called the sell side in the business, which is that I'm doing the research, I'm doing stockbroking, I'm doing some amount of investment banking, and therefore, advising funds, not doing the fund management myself. So we used to deal almost entirely with foreign institutions. And by that time, it's already been almost a decade doing this. So they had become friends, and you knew fairly senior people in very large global funds. So when I thought of going global, I went to them and I said that I'm thinking of going global. What do you think? And they said, add a Thailand or a Philippines and it will be the same fund manager. They'll give you some business. I said, what's the fun in adding smaller markets? They're even smaller than India. So what's the point? So I want to go to the bigger markets. And they said, are you crazy? Because nobody had ever thought that research could be done offshore. I'm talking the 90s. So they said, they have all the Wall Street firms. They have all the large banks who are telling them things. You are a nobody. Why would anybody listen to you? And if you want to go to the big markets, do the small stocks in those markets which don't have much coverage. I said, I think I know how to do securities research, so why shouldn't I be able to do it elsewhere? And so against all advice, in 99, we became not just the first Indian, we were the first Asian members of the London Stock Exchange, other than the Japanese. Only the Japanese had gone west. And another year and a quarter, we got the US broker-dealer license, also NASD, because there you had to pass a few exams and all that. And we started coverage not just of the US, but all UK, Europe, even the bigger companies in China and Japan, we've been covering since then. And the most heartening part, Sampada, was this, that here you also personally know the media to an extent. You will know some journalists, editors, all that. There it was only your work going out. You weren't really interacting with anyone. And in no time, it was picked up by Forbes, Fortune, Business Week, Wall Street Journal, front page, you name it, we were there. Just on the quality of the work. They said that it's a passion for me, and therefore that's what I have tried to convey to the organization, that you must go into the depth of everything, you must understand it really well, question everything, even something which is written in the books, which is said by the greatest investor, which is said by a professor in a University of Chicago, doesn't mean that's the gospel truth. You have to still test it out and see whether it holds in the real world. And that's the way we did research. So it was very heartening. I even remember showing my parents have been both professors. So I remember showing this Wall Street Journal front page thing to my father, who always wanted me to do a doctorate, that I may not have become an academic, but I'm still doing research of some sort, And it's being recognized as something path breaking, that this is a way nobody had looked at it and all that.
Yeah.
So
no, that's I hear your journey, but you're talking about the 90s, right?
Right.
So did you face a lot of racism or sexism or both when you went to Wall Street and Bond Street, and did that happen?
Actually, of course, in the beginning you were dealing with people who were coming to India anyway, so they're, and it was it sounds in a sense racist to say it, but I did see that there were categories of fund managers. So for example, the Americans were very fair. Both the American funds, whoever was working for them, or Americans working for whichever fund, that if they used your ideas, they wanted to pay you for it.
Okay, that's
so
good.
They were I know of people whom we didn't even know, some fund, who said, somebody has been sending us your reports, and because we've been using it, we want to pay you for it. So,
wow.
So that's
a lesson in professionalism, and fairness.
So the US and Scotland, these people were very fair. England was little more of a old boys club, so it was good to see how these things operate. In terms of sexism in the business, not so much, because see, in India, what I used to notice was that a lot of people, especially those from more traditional communities, were simply not used to interacting with women. So if you met them, they will talk to you, but they would rather not make eye contact. And if you went with a male colleague, however junior, they would rather look at him and talk. Even if you are asking the question, they would look at him and answer.
You know, that is a story common for women across India. If you're going in to make a business deal, if there's a guy, they would rather talk to him.
Yeah, so that kind of thing. But otherwise, I mean, in terms of, it didn't really hold me back from business. But those days in the 90s, there used to be a lot of women fund managers also.
Okay.
But I saw that the number has, for some reason, come down rather than gone up.
Okay.
So a lot of fund managers investing into India also used to be, reasonable number used to be women as well. So there was not like any blatant sexism. Ultimately, you have to give the right advice and people make money out of it. So that
they're happy to take it wherever.
Yeah. So it's not really. And actually, the other thing is that I do not go in with that preconceived notion. It doesn't occur to me. Even today, I mean, I was recently at a gathering of some bank had called their clients for a gathering, and I think there were 40 clients there, and I was the only woman. I mean, so it's still very skewed, but now at least I kind of notice it because I'm trying to notice it, but in actual fact, it doesn't occur to me at the first instance that are there any other women, or as a professional, I'm fairly gender agnostic. So the question itself doesn't occur to me that often.
I wish everyone would be gender agnostic, right? That would make life a lot more simpler.
Like when even at IIM, I remember when I topped, a lot of the girls were very happy that you've beaten the boys, and I said, how does it matter? What gender doesn't matter. Now I underline it simply because I realize girls and young women require more role models.
Yeah.
Because even now in my business, the number of women is very low. You will not find many women seriously in the investment business. Banking has a little more, but investments not so much even now. Still very, very low.
So Devina, you mentioned that there are much fewer women now than what you remember in the 90s, right? At least in your industry, though they are more in banking. Now there are a lot of women who look up to you as a role model, as a successful self-made woman, right? What would you like to tell them, or what do you think they should learn, or what do you wish you had known, 20, 30 years ago?
I think women should go out and achieve their goals and dreams. Many times women are asked, what would you tell a younger you? I say always invert the question, what would a younger you think of you? So what were your dreams when, let us say, you were a teenager? Have you gone towards that, or have you got derailed? So that's because there are always many things to negotiate, especially within society and family, and women give up on their ambitions. Even when I was growing up, sometimes I would hear women around me saying that now I have ambitions only for my husband and my children. And I used to think that if in every generation, this happens, then when do the girls get to achieve their dreams? And to an extent, it is still the case, unfortunately. I mean, young women interviewers still ask me that how do we come up with a career where we can balance home and career? And I said the tragedy is that no young man has ever asked me this. So you are clipping your own wings from the start. You think you have to do something within that defined area. And like in financial media, you see a lot of women. And I remember one of these, the magazine had done this 40 market gurus issue, and I was the only woman. And there were a lot of women on the media side. And I was asking them that why don't I see more on this side? And they said, no, it's a taxing profession. That's what we've heard. And so we'd rather not, take something up which requires more hours and all that, because we have to look after the home and family. So always in women's careers, the elephant in the room which remains unaddressed is what do the society and family expect of women.
Right.
So as women, it is not a fair world. It's not a fair world at any level. I mean, if you go to raise venture capital, and this is not just in India, across the world, women founders get less money. More than that, when they actually did a fly on the wall experiment, they found that they are asked different questions. They are asked about what can go wrong, what are the risks, where the men are being asked about the size of the opportunity. And
Right.
so it's not a fair world. You have to fight to get a lot of things that should be yours by right. But do that, and as I said, don't lose sight of what your own ambitions and dreams were.
Right.
That's a tough one.
That's the crux of it. There's, that was very insightful. There's another thing that you've mentioned quite often about how women who even those who make money don't handle their own money.
Yeah.
What would you like to say about that? That made me think twice for sure.
Yeah. I mean, that's a cause for me that even high-ranking professional women often do not manage their own money. They leave it to the men in the house. And first of all, just because your husband or father or whoever sounds more confident about money doesn't even mean that they know a lot more about the stock market just because they're talking about it in cocktail parties. Confidence does not equal competence. And as I said, you don't have to know the every last bit. Just get your broad asset allocation right, but manage your own money, because there is no independence without financial independence. Unless you are making decisions about your own money, you are not truly independent even when you are earning. And the other reason, which was what we talked about just now, that because women have all these home family kind of responsibilities, they think this is one thing my husband is happy to take care of, so let him do it. So let it be one thing off my plate is the kind of mental framework. So, but delegate some household work to him. Don't delegate management of your own money. And the other important thing also is that if you're putting some part of your portfolio in a risk asset like equity, either direct equity or indirect through a mutual fund, PMS, AIF, whatever. There is going to be a time or times when you will lose money. I mean, that's a given. It's not even an if. But when that happens, the woman's self-talk and the family's talk is that, why did you do this? You didn't understand it. Look, you've gone and lost money. Mm-hmm. Whereas if the man loses money, often the wife will not even bring it up.
Yeah.
In fact, men tell me, how would she even know? I won't even tell her that I've lost money. So it's there's so many places where you really have to think from first principles. As I said, even in school, for example, I had decided that after marriage, I will not change my name. No Kanyadan in my wedding, all of that, and all those decades back. And fortunately, I mean, my parents never questioned me and said, what are you saying, or what will society say, and all that. So which is why my book is dedicated to my parents, because they taught me that you can have your own opinions, even if that's different from everybody else's opinion, even if it was different from their own opinion. They never stopped me from having views of my own.
Yeah, that's a lesson there for all parents, actually, in terms of how to bring up a daughter, right, without pulling her back right from day one.
Yeah.
We look at your long and very successful career across across a couple of decades. What is a sort of gender neutral advice you'd give to people who are starting their professional career, or somewhere in the career path? Like, what is the advice you'd give? Like, what does it take to be successful?
So, I mean, see, I've been an entrepreneur. Now, entrepreneurship is a fairly lonely journey, and anybody who wants to become an entrepreneur, whether male or female, of course, now the support systems are much more. You actually get money.
The formal support systems.
Yeah, because when I started, there was no cachet to giving up a good job and starting a business. It was considered a very bad decision.
Especially
Citibank, which was supposed to be the number one job then.
Yeah.
So to do this there was no cachet to it, to becoming a broker and leaving Citibank and becoming a broker. But now, of course, you have all that. But the point is that in entrepreneurship, always what you expect will not happen. Sometimes things will go better than you expected. Sometimes it will be worse. Sometimes you'll have to go in a different direction altogether. So that whole adaptability and learning, that has to be inbuilt. I mean, it is also sometimes you're not even consciously thinking about it. You are in it and you said, fine, that this has happened, now what do I do? So I spoke about what an entrepreneur needs As a professional, as I spoke about earlier, that you need to be able to learn to change, because that pace of change is only accelerating. The other basic principle, and this goes back a long time when I was in school, and we were at a place where actually civil servants were getting trained, and there was someone who came to lecture there, and my mother asked him that, because we were still in school, that which field should my children choose, which is a good or growth area to be in. And his answer was, it does not matter what field they choose, what matters is that they should excel in it.
Okay.
So I think that is really the guiding principle, that whatever you choose to do, do it at least to the best of your ability.
No, that's actually great advice. And would you say that's one thing that you believe remains a standard irrespective of what decade or what amount of work experience one has? Would you believe that remains
Yes,
standard?
I was never outwardly focused personally in terms of competition. So for me, always the question in my mind was that, am I doing my best? That I should not feel that I did not try my best and therefore I did not achieve what I could have achieved.
That's something I want to talk about. You've mentioned this part about not being faced by competition, and at one point of time you were competing with the Merrill Lynch of the world.
Yeah.
So how did you not get intimidated with that, and how did that go for you?
I don't know. I made the decision to set up this business. One of the primary drivers was the fact that Dr. Manmohan Singh, who was then the finance minister, he brought out this budget post-liberalization, saying that now foreign institutions will be able to invest in India. Till then, no foreigner could invest in the Indian stock market. And I said that now the market will professionalize. And that was really the major trigger for me getting into business. But when that happened, when the foreign institutions came, as you said, the foreign brokers also came, Merrill Lynch, Morgan Stanley, Jardine Fleming, etc. And in the beginning, I thought that they've been doing it 50 years, 100 years, they must know a lot. So I must learn from what they're doing. And I looked at their reports and I said, this is junk. I said, this is not great analysis, this is not well written. So after that, I never looked at competition. I said, let me learn from the books, let me learn from first principles. And I never hired from competition. We hired, of course, in sales and all that, but in research, I never hired from competition. I said, I do not like what they do. I do not respect what they do. So how can I hire from them? Nobody else hired freshers. I hired only freshers. It's difficult to train freshers, but I said, at least there will be no unlearning involved in what they have, the bad habits they've learned elsewhere. So we became kind of the training institute for the industry. So my alumni are all over. So so at Teachers Day, Guru Purnima, I get all these messages. So
that's a good feeling, I'm sure.
Yeah, it is. And it also ties back to my parents, who were both professors. So
which is where I think your heart lies a little bit. That's what I keep getting the feeling.
Actually the book also came out of that it was really that all the learnings beyond a point, you also, besides the learning, you also want to tell people that, have you looked at it this way, have you understood this? And that my book really came out of that thinking.
So that was the inspiration for your book, right?
Very much. I find that the teaching genes are strong.
The teaching genes. No, the book is very enlightening. I read it. It is my first investment book, so I did read it, and it was really, you kind of try to simplify it for people who are not from the same background and don't have the same understanding as you. So I think that really kind of.
And I had to fight with the publisher, saying I want subheadings, I want highlights, I want to put chapter summaries. In fact, I have given even the links to the videos I have made on the same subject, so that it is understandable. So I'm very happy when people tell me that my 14-year-old could understand it, or my elderly parent who had never read an investment book could understand it. So I'm that's actually an endorsement of what I set out to do.
Yeah, there's also references and quotes, and there's a lot of cross-referencing back and forth as well. So you've tried to summarize like we said in the beginning of the podcast, we're trying to summarize your wisdom in a podcast, right? It's there in the book already. But when you look at your, let's say there's a pyramid of the amount of women in the workforce, especially in your industry. Now that pyramid is getting narrower and narrower and narrower, and now you're in that 1%. When you look when you look at it, do you find it's a little lonely at the top? Or maybe you're, like you mentioned, sometimes or quite often the only woman in the room.
Yeah.
What's that experience like?
Unfortunately, that's still the case. I mean, when I joined Citibank, I was the only woman officer in the entire investment bank, which included all the treasury and money market and all that. So it never, I mean, it it was not front and center as far as I am concerned. It still is not, but now I'm more conscious of it because I realize that for women as a whole, this is not a good situation to be in. That what was the situation decades back, why is it not changed as it should have? So that's still, I mean, that's very much a concern for me, not for from my personal side, but I'm saying that this is not a good situation, that we do not have enough female labor participation. Now women or young girls study. If you look at the board exams, the merit list is a lot of it is girls. Even management institutes, I was recently a chief guest at a management institute, and the professors told me that last 15 years, if we look at the merit list, it is mostly girls, but many of them are not working anymore.
Yeah.
Because of family pressures.
You also mentioned a lot of your batchmates are not working anymore, right?
So I'm, you can say, a previous generation. But what upsets me is that even women who are 20, 30 years after me, also that is still the pattern, that a lot of women, even with good degrees, give up working because the husband is getting transferred to another city, then to another country, and beyond a point it becomes too difficult for them and they just give up, or they might be doing something but not a full-fledged career that they were trained for.
Yeah, and not at the scale that they are supposed to.
And they are capable of. Right. And I can tell you, women of my generation who did not work, or who even thought they chose not to work, now when they look back, a lot of them regret it, saying that what did I do with my life? What do I have to show for it? Yes, I looked after the home and children very, very well, but now the children have moved out. Nobody is even particularly grateful for all the things you did, and you feel that what do I have to show for my entire life?
I think also women need to take more responsibility, that if they have the opportunity, they don't give it up out of their own calling. I mean, if they don't have the opportunity, like a vast majority of Indian women simply don't have the opportunity, that's different. But if they have the opportunity, maybe they need to.
Yeah, and even now, I mean, this also surprises me. I'm talking about young women in their 20s tell me that parents don't want them to go to another city to study or to work. They say, whatever you want to do it here. So it's still, I mean, I'm so shocked because my mother went to a hostel 70 years ago. So, for me, it is so alien that, and my mother was working well before I was born, and she remained, she continued to work all through. So for me, all these are very alien concepts, and I'm always shocked at how many young women tell me things like this.
I guess that's something we all hope will change, right?
Yeah.
My next
and
question.
Be the change.
And be the change.
Be the change that you hope to see, because it's not going to happen from the skies. And I can tell you that nobody wants to give up privilege, whether it is class privilege, caste privilege, or gender privilege in this case. So men will tell you that no, they are not privileged, and so you'll have to fight for it. I mean, that's the truth of the matter, that nobody gives up privilege easily.
Yeah, you've also, one of your advice that I've read is that women need to be just more aggressive, and that's something you have not hesitated to do in your career, where earlier used to maybe, now you're like, okay, let me finish my point, let me go with it.
Yeah, I've not been very, very assertive. I was a pretty shy, quiet girl for most of my school and college and all that. But as I said, this is one of the things I wish I had changed early in my career, because the fact is that women are interrupted more. This is data. This is not something
I agree with you.
I mean, this is even in the US Supreme Court, if the judge is a woman, she is interrupted more often. Indra Nui wrote the same thing about the Pepsi boardroom, that that there is a difference when a woman speaks and a man speaks. So that being the case, earlier if somebody interrupted me, I would just cede the floor and let them continue. Now I've realized that you should say that I haven't finished, let me finish. And so that is one tip for many young women.
Yeah.
And unfortunately, the way again the world is, if a man is assertive, he is leadership material. If a woman is assertive, she's
problematic.
too bossy, and she's this and she's that, and worse words than that are used for a woman who stands her ground. So yeah, it's still not fair, but you have to again assert your rights.
Yeah, that's great advice.
Right.
And my next question is a little more gender agnostic. For firstly, what do you look for when you're hiring people? Is it their analytical ability or their technical skills, or do you look for aptitude? And secondly, what is the advice for Gen Z out there in terms of their professional career? What would you advise them there?
So what I spoke about, that confidence does not equal competence in another context, this I actually learned through hiring mistakes, that you realize
Okay.
that people who are saying that I know this or I can do this doesn't necessarily mean that they can do it.
Lesson.
Yeah, so that was that you learned only after making those mistakes. If I was hiring for a research job, which was, a large part of what I was doing, it was, of course, you needed the technical competence and the knowledge of finance fundamentals. Now, there again, there was a learning thing, that what you could not gauge in the interview was whether people are willing to work hard. What their attitude is. That was very difficult to gauge. And you did several iterations. So there was a time when we used to hire a lot from IIMs. I remember there was a year when we hired a dozen analysts from the IIM. And then I absolutely stopped, because I realized that as a profile, I mean, it may be a generalization, and I am from IIM, so it's not as if that I'm talking about somebody else. But I found that in general, that cohort, IIT, IIM kind of background, a lot of people think I have nothing more to learn. I already know it all. And we are a very learning oriented organization, so that didn't work for me. So then actually what I did was I started hiring the toppers from tier 2 institutions, and the part of the reason was that, of course, you can gauge the knowledge and all that, but being a topper or somewhere near the top was a shorthand that you can work hard, because you can't top anyone anywhere without the ability to work hard. So that worked out actually quite well.
Okay.
So now we don't hire as many people, because a lot of the heavy lifting is done by the systems. But and we don't write reports, because when we were servicing the fund managers, we used to write like 70 reports a month. Now that you are making your own decisions, you don't need the report in that much detail or anything like that. So that's different. But this was at least particular to what we were doing.
Okay. You just mentioned most of the heavy lifting is done by the systems.
Yeah.
You do believe there's still a role for humans, right?
Yes, as I said, we call it the human plus machine system.
All right.
Because as I said, humans are required at two stages. One is to code, so which is why systems made by pure techies don't work as well for investments, because now the computing power is there, so you can literally test thousands of factors. And something, if you test thousands, just statistically speaking, and my basic degree is in statistics, you will find some things which appear to have a correlation with the market movement, but there might be no real basis to it, because two random variables in the world can have a very high correlation. If you plot, nuclear energy versus cheese consumed, it might have a correlation of 1, but it has nothing to do with each other. So, like one of the disciplines we follow is that you must think of a factor which has some logic and then test it, rather than just ask the machine to test anything and everything. So, we don't want y cubed plus square root of x divided by cube root of z kind of thing. We want only factors which make some sense in English also. So that's one. So like that, there are many steps you have to do to make sure that the system actually does what you want it to do, and is not misleading you. And of course, the system can't capture everything. It can't capture geopolitics. It can't capture a COVID-like situation. And so there are many things which the human comes in. And even after a system throws up something, we always cross-check it humanly, that that whether the story for that company holds and all that. But what the system forces you to do is look at data. So you can overrule the system if you have some other fact.
Okay.
Like Daniel Kahneman calls it like a broken leg analogy, that the system will better predict if someone will go for a concert, and you should overrule only if you know that person has broken their leg and cannot go, Not so otherwise humans are creatures of the story, and stories persist in your head. So even when the facts and data change, a human fund manager can rarely change their view or their story. And we've seen it happen many times. Like we bought a lot of capital goods and industrial machinery companies in 2021 because our systems showed it. We cross-checked it. It all held up. There was no, factual reason to overrule it. But the human fund managers didn't discover it for another 2.5 years, because for the 12 years prior to 21, that sector had been an absolute disaster sector. So human fund managers had stopped looking at it. This is not worth looking at. This is a, useless sector. So even when the facts changed, they could not change their mind. Still, the stocks had gone up, double, tripled, even quadrupled. Then it occurred to them, yes, there's something has happened in this industry. So the persistence of vision, which happens for us, that's how we see television or anything. So, but the same thing happens. That persistence of vision happens with stories also. And so the data and facts go into the system. The system forces you to look at them.
Yeah,
that's one of the functions.
Okay, because you've been one of the first ones to talk about using AI and using human judgment as well together, merging it well, right? So my last question of the day. Now, if you have to look at your career and let's say your life, what would you say you're most proud of? And don't be modest here, but what would you be most proud of, and what are you excited about in the future?
Okay, first of all, I mean, in any kind of this story of your success, we make it very linear, that I did this, and this is where I reached.
Yeah, maybe.
But a large part of it is also that there is, whatever you call it, luck, destiny, God, karma. There's a considerable portion of that in being the right place at the right time, whatever it is. So,
do you feel that has played a lot of role in your life?
Always.
Luck?
I think in every success story. I mean, life is a game of only luck and skill. There's no skill alone, even in investing. There's no skill alone. There's always luck. We see the luck when for instance our portfolio goes down, then we will see all that this is all the risks and all that, and this is what went wrong. But the luck is there in the good luck part also when your portfolio is going up. But there we say that no, we are this genius.
Yeah, we are smart. We got it right.
Yeah. So I mean, I'm proud generally of I would say my strength and my resilience. That I have faced, I would say, 3 black swan events in my life and been able to come out of that and with strength. So that's the part that, and I think a lot of it comes from my background in my childhood. And what was the second part of your question?
What are you excited about? What are you proud of, and what are you excited about in the future?
Oh, there's still a long way to go, because the asset management part we started quite late. I started quite late.
Okay.
And so there's a long way to go in that. And as I said, the most exciting part of my career is that the learning never stops. And for me, that's the big thrill always.
Yeah. When you said the learning never stops, I'm going to take one more question. In your book, Money, Myths and Mantras, you have referenced some of your favorite books. You've been very generous. So I'd like you to tell us some of your favorite business books here, whether they're autobiographies or otherwise. So
it's always very difficult for me to come up with a short list. Every year I do this best books roundup, and each year it is difficult for me to whittle down the list to even 10 or 12 books, because which is why, I mean, in the book also I've given 5 categories of books. So if you don't know investing, then obviously you have to read the basics first. My all-time favorite, my pin-up, I say, is Daniel Kahneman, whose 2 books, Thinking Fast and Slow and Noise, which is not just about investing, it is about human decision making. So any kind of decision making. Those are a little harder to read. A simplified version of that is The Art of Thinking Clearly. That's one category of books which actually I've been reading a lot of, which is All the Ways Your Brain Trips You Up. So there's Invisible Gorilla there, there's The Halo Effect. And then, of course, you mentioned autobiographies, biographies, and stories of businesses. So if you read stories of businesses, you realize how many ups and downs there are in businesses. So whether it is the the Tanish story, which is about Titan, which is what I read recently. Subhash Chandra of Z had written a kind of no holds barred autobiography. Yeah, that was good fun. And Richard Branson, I think, has lived several lifetimes in one. So his book is one fun read. Then there is Shoe Dog about the Nike founder. So there are many. I mean, there are the books about Amazon, the more you read not just autobiographies, but any books that you read, that's, unless you feed your mind, nothing comes out. I mean, that is what opens the doors and windows in your mind. I mean, to me, there's nothing like reading, So.
Yeah, that was so you did give us some books, you did mention some names.
Yeah.
So I think that was the perfect sort of ending for our podcast. And thank you so much for taking out the time, for coming here, and for doing something off the beaten track, because I didn't want to make this a finance podcast. I wanted it more about general timeless lessons, if I may. So I think we managed to get that. And I hope you guys enjoyed this. We had Devina Mehra with us, and it was a very, we got her in a very unusual space where we got her to talk about her journey of building First Global, which is India's one of India's premier investment firms.